Hello and welcome to the latest episode of Millennial Money. My name's Lauren and I work for an online personal finance website called Money to the Masses, and we cover a host of investing and personal finance topics over on our website moneytothemasses.com. Also follow us over on our social media channels, so our Facebook Money to the Masses, our Instagram at Money to the Masses, and our Twitter at Money to the Masses with the number 2. So this week I'm going to be sharing the advantages and disadvantages of remortgaging. So what is remortgaging? Remortgaging is the process of moving your mortgage from one lender to another, or alternatively, moving to another mortgage product with the same lender. Now, typically, the most common mortgage is for a 2-year or 5-year fixed rate deal. This means that you're on the same fixed interest rate for a period of time, e.g., 2 years or 5 years. And then at the end of the fixed interest period, the lender typically puts you onto the SVR rate, which is the standard variable rate. This means that you are usually prone to be paying more interest than what you were on your fixed deal, which is why people tend to look into remortgaging. So, what are the advantages of remortgaging? One of the key advantages of remortgaging is remortgaging onto a better rate. So, once your fixed rate comes to an end, you will go onto your lender's standard variable rate, which means that it can move in line with the base rate with the Bank of England. And this therefore means that you could end up paying a slightly higher interest rate on your mortgage. So, a reason to remortgage will be to switch to a better deal. And switching to a better deal will usually see a reduction in your monthly mortgage payments. Another advantage of remortgaging is to have better control of your finances. So, because you are remortgaging, you may remortgage for another fixed deal, either 2 years or 5 years. And there are longer fixed term mortgages available with some lenders. So, if you did want to fix for a longer period of time, this is something you could potentially look into also. But it allows you to manage your money for a set period of time. So, for example, if you fix your mortgage for 2 years, you know exactly how much you're going to pay for the next 2 years on your mortgage, and this will not change all the time you're on the fixed interest rate. This will then give you peace of mind over the long term because you don't have to worry about fluctuating mortgage rates and therefore having to potentially pay more each monthly mortgage payment. Another advantage of remortgaging is borrowing more money. If you want to do any home improvements such as a new kitchen, bathroom, or maybe even an extension, you could potentially remortgage onto a better deal and also remortgage and have more money. So that means adding more money onto your mortgage. You do need to look into this carefully though, because is this more cost effective by remortgaging and borrowing money? Could you potentially get a better rate elsewhere and maybe by getting a personal loan? So be sure to look into that to make sure you are getting a better deal if you decide to borrow money when you are remortgaging. Another advantage of remortgaging is you can potentially remortgage your property and release some equity in your property to consolidate your debts. This means if you have debts in multiple places which you are struggling to pay off, you could potentially use a remortgage to be able to clear your debt. Now, this is something that you will have to disclose to your lender if you are doing so, and it could potentially affect your ability to get a loan if they realise that you are remortgaging to consolidate your debts. It is also worth considering carefully if this is the best option for you, because you could potentially end up paying a significant amount more interest over time because you are adding the amount over onto your mortgage in order to consolidate the debt. So do look into that carefully before you make the jump to remortgage and consolidate your debts. Another advantage of remortgaging is if your loan to value on your property has reduced over time, then you may benefit from preferential interest rates. This is because over time, your property could have potentially increased in value. And as you've been paying your mortgage off, this will therefore lower the loan to value rate. Another thing you could also do when you remortgage is you can reduce the length of your mortgage. So potentially, if you've got a mortgage for the first time, your loan could be over the course of 35 years. When you remortgage, you can decide to reduce this to say 25 or 20 years, which means that you have a mortgage over a shorter amount of time and you will therefore pay it off more quickly. However, one thing to consider with this is reducing the length of time that you have to pay off your mortgage is likely to increase the amount that you pay on your monthly mortgage payments. So you need to think about this carefully before you do so and make sure you can definitely afford the monthly mortgage rates that your new mortgage will be when you switch over to a shorter term. So what are the disadvantages of remortgaging? One of the disadvantages is if you decide to switch to a new lender, you will be treated as as a new applicant. So if you have had any changes in circumstance, for example, you have become self-employed, it could potentially be a bit more difficult for you to obtain a new mortgage. You may have to prove your income, for example. Another disadvantage is if you decide to borrow more when you remortgage, for example, for the home improvements in the property, then this could potentially mean that your monthly payments increase. Can you afford the new increased monthly payments? You need to make sure that you are financially comfortable before remortgaging and remortgaging to borrow money, because it is really important that you make sure you pay back your mortgage each month. Another disadvantage is if you have borrowed more money on your mortgage to consolidate debt, then you do need to consider very carefully the amount of interest that you will be paying, because this is likely to be significantly more than the interest that you would pay if you just took out a personal loan or did a 0% balance transfer. So be sure to look into your options for consolidating your debt carefully, and we will link to an article below this video if this is something that you are considering doing. Now finally, one disadvantage of remortgaging is you could potentially be charged exit fees for remortgaging with your current lender. So be sure to read your mortgage documents carefully to ensure you know exactly how much you're going to be charged and how much you are expected to pay. Also, one tip when looking at your mortgage is do look at the amount of interest that you're expected to pay over the course of the mortgage rather than just the headline interest rate, because this can be different and it will also vary depending on your circumstances and your credit score. So that's it for this week's Millennial Money video. If you do have any questions, then email me, lauren@moneytothemasses.com. If you want to find out any more information on remortgaging, then check out the articles that we have linked to along with this video, as they will share everything you need to know about remortgaging and how you can find the best deal. Thanks for watching.